Continue this conversation right now. Take a closer look at what the Federal Reserve may do, what this path means. Former Dallas Fed President Robert Kaplan joins us. He's now vice chairman of Goldman Sachs. And I'll ask you the same question. What's your take, Rob? Because here we have the markets, which have moved, even in the past couple of days, on some kind of newfound expectation that they think 50 basis points may be in the offing. I don't think there's a better explanation to explain why the market's moving the way it is. Will they ultimately be disappointed?
They might be, and that happens sometimes. My own view, if I were sitting at the table, I would be advocating for 50 in this meeting. And the reason I'd be doing that, I think with inflation running around 2.5% and sluggishness in the labor market, I think that over the next few months, I'd want to see the Fed funds rate down to, say, 4.25%, 4.5%. And I think the Fed may be a meeting or so late. And if I had a do-over, I might prefer we had started the cutting in July, not September. And so in light of that, I'd want to front-end load this a little bit, do 50 in this meeting. However, in the press conference, it does put the onus on Jay Powell and after the meeting, other Fed participants to make clear that future action is likely to be more measured. And so that's what I'd be recommending.
So, Rob, you know the folks who are around that table. What do you think they're going to be saying?
My guess is they're split. I think there'll be some around the table who feel, as I do, that they're a little bit late and they'd like to get on their front foot and would prefer not to spend the fall chasing the economy. There'll be others that, from a risk management point of view, just want to be more careful. But I think, given Jay Powell's speech in Jackson Hole, that now inflation and the labor market are more balanced, and the fact they don't want to see any further weakening in the labor market, I do believe, from a risk management point of view, 50 makes the most sense. If the group is split, a lot of this will depend actually on what Jay Powell
Well, that's what I was saying. So what do you think he personally thinks? What is his predisposition in all this, and then his ability to try to wrangle everybody to a unanimous decision?
So I mean, obviously, I don't know. If I were giving, all I can tell you is if I were giving him advice, I'd prefer to see 50. Listen, the other issue is, I said with inflation at 4.25, with inflation at 2.5, I don't want to. I'd like to go to 4.25, 4.5. I actually don't want to go below 4.25, 4.5 until we see more progress from 2.5% inflation to 2. And my concern is, if you see some labor market weakening during the fall, the Fed may get forced to do more than 100, and will be chasing. And I actually, what I could see happening in 2025 is the Fed will hang around 4.25, 4.5 until it sees more progress. Once it does, then it can go lower.
Rob, what do you tell your clients at Goldman about what you think equities would do in the aftermath of a 50 basis point cut, in the aftermath of a 25 basis point cut?
I tell clients that, and I'll stay away from trading people. If you're an investor, I think you should look over the horizon and understand that the Fed is now going to be lowering the Fed funds rate. It's hard to predict, and I think it's dangerous to try to invest based on a prediction of how fast. It's likely to come down a couple of hundred basis points over the next couple of years, and you should position yourself with a proper asset allocation over the horizon, and do not make decisions on short-term moves.
But part of the reason I ask is we're now, a month and a half away from this election, and I know the election's not supposed to be a part of any of these kinds of conversations, but is it possible the market rips in reaction to a 50 basis point cut, and then all of a sudden you're going to have finger pointing politically about what this is doing or not doing to the electorate?
Yeah. So whether you do 25 or 50, the Fed will be accused by someone of having been political or made the wrong decision. In light of that, I think the best thing to do is decide what you think is right. And make that decision. You're going to get criticized either way.
You know, yesterday we had Roger Ferguson on, the former vice chairman of the Fed, and he said he thinks he could see a case for either 25 or 50 basis points, but if he were voting, he would vote 25 basis points for a lot of reasons, giving you flexibility, just thinks it's a wiser thing to do, that you can kind of amp things up as you go. What would you say to him if you two were both still in the room?
My counter to him, I'd say, I understand your point. My concern is if you do 25, there's a lot of pressure then on Jay Powell in the press conference to suggest they'll do at least another 25 and even 50 if they need to. And I feel like you're reactive, you're on your back foot. I would rather do 50. You're not going to regret 50. We're going to do at least 50 through the fall. Let's front-end load it. Let's make up for the fact that we might be behind. And then make clear in the press conference we're going to make decisions in a measured way based on how the economy evolves. Then we're on our front foot, and that would be my counter-argument.